there, good morning. You're watching Buy Now, Sell Now on ET Now. I am Snehi Shah. With me is Cheryl D'Souza, and this is a show where we'll be taking you through all your viewer queries, and we'll be bringing our experts on board shortly to get all your stock-related queries answered. And before we do that, let's just take a quick revisit at the markets. Cheryl, we're off the day's highest point, but nonetheless, the shade of green is looking much better than yesterday, right?
Absolutely. Very good morning to you, Snehi. And I like the way how you are donning a white shade. I have
I'm
the
trying
green
to stay
shade on.
neutral.
You're trying to be neutral. You're waving the white flag. Hopefully, the markets will actually take cues from that, and that's the reason why I'm wearing green as well. Hoping that we are able to stay with that shade of green on the screen that we are seeing today. Remember that we have actually snapped a 3-day losing streak. We are gaining for the first time in about 4 trading sessions. But let's not forget the globe as is not looking that great on the way how it's been performing ever since the tariffs have been announced. No doubt today you have Asia that is bouncing back because you have indications that Japan and the United States are actually having some talks on back of tariffs. On back of that, you saw a sharp spike in Nikkei as well. You had Shanghai also that was actually bucking the trend. Hang Seng as well holding on to the positive territory. So yes, it's a shade of green across the Asia screen, and that's exactly what you are actually seeing at this point in time when you talk about the Indian markets as well. There are some commentary coming on the crude prices where Goldman Sachs is believing that the crude oil could sink below $40 per barrel under extreme conditions, and that also one of the reasons could be that it is a positive coming in for the Indian markets, the way how the crude oil market also performs at this point in time. But let's take a deeper dive into the market and see which side of the pockets are moving at this right now, given the fact that you have a lot of stocks moving on back of news flow. Like you have Titan that is moving on a Q4 update, you have BEL that is actually moving on back of order wane, and among the top gainers today on the screen is Shriram Finance, Titan, Geo Finance, Grasim as well as BEL. While on the flip side, it is Power Grid, M&M as well as Hindalco and Nestle taking a bit easy. But the advanced decline ratio right now pretty much skewed in the favor of gainers. Let's take stock of the sectoral indices and what they're doing at this point in time. All the sectors actually are in the positive territory, and it's been a while we've seen that sort of a screen. With the PSU Bank Index leading the gains, you have Realty as well as the broader markets are outperforming the benchmark indices. So that's the way how the markets are panning out at this point in time. Snehi, nothing to complain, at least today. Hopefully, we don't have to complain later on.
Well, you know, I'm trying to stay neutral, Cheryl, like you said, because we never know when the market is just flippy-floppy the entire day. But nonetheless, it's looking good right now. Let's welcome on board. Our guest for today. We have Kunal Bothra, who's joining us in the studio, and we also have Rajesh Agarwal, head of research at AUM Capital, who's joining us. Before we kickstart your queries, viewers, just a word of caution. Please, when you write your queries to us, please mention the stock name clearly. Mention what is your buying price, how much of the stock that you are holding, and what exactly is your question. And if it's about a stock that you want to or wish to buy in the future, then what is your holding period that you are eyeing, and of course the name of the stock. Please mention all this clearly so that we'll be able to address your query better. That's the number that you can write to us on. On that note, let's then begin answering and addressing all your viewer queries. Kunal and Rajesh, very good morning to both of you, and welcome to Buy Now, Sell Now. And Kunal, first up, let's come to you. Let's begin with you. We have our viewer Anand, who's writing to us from Goa. He holds Mahindra Holidays and Resorts, 110 shares at 379, and Crompton Greaves Consumer, 100 shares at an average price of 406. He's asking if he should add more or wait for a further correction. Holding period is 3+ years. What's your take on that?
Yeah, I think if you're having that kind of a time frame, then I would definitely advise that it's a good time where you should look to average both of these names. Crompton specifically, I think that stock is one of the stronger names so far in the overall mid-cap category. But when you look at this from the 2020 lows, of course, and now with the stock just about coming back to the 330 odd mark, I would believe that the signs of bullish RSI divergences, the stock establishing a support at current levels could be very interesting. But you'll also have to be cognizant of the fact that if in case the news flow starts to deteriorate further across the globe, then you might probably expect that these stocks may get into maybe one more round of correction. So don't invest the entire sum which you're looking to invest at current levels. Maybe do a part investment at current zone, and in case if over the next say 1 to 3 months you see better opportunities, better price levels for these stocks, that could be another point where you may consider averaging further.
All right, so that's the Take coming in on those counters. Very good morning to you, Kunal, as well as Rajesh. Thank you so much for joining us. And looks like it's the day of Anand because we had a query coming in from Anand from Bangalore, Goa. Now I have a query coming in from Anand from Bangalore, and also there is another Anand from Delhi whose birthday it is today. Happy birthday, Anand, because he's a follower and also a viewer of the show and has requested that we wish him happy birthday. So happy birthday to you, Anand, and thank you for being such a follower of the show. So now let me take the query coming from Anand from Bangalore, and he has a question on oil and metal space. IOC, HOEC and Hind Copper are the counters that he's talking about. Rajesh, IOC, his buy price is about 120. HOEC, his buy price is 200, and Hind Copper, his buy price is 250 rupees per share. He wants to know whether he should continue to hold on to these counters for at least a year, hold, average or exit. What's your take coming in on the counter, which is actually being hit the most when you talk about the way how the global growth goes on?
Good morning, Shail. Good morning, Snehi. Good morning, Kunal. And happy birthday to Anna. As far as these three counters are concerned, I think all are good bets for long term. Taking one by one, IOC can be a very good bet because of the fact that crude is on a downtick, almost 52-week low. And people are talking about just a few minutes back, you were telling that it might go to below $50. So that's a good news for entire OMC pack, out of which IOC dividend yield is also better. And other things, given that the demand is going to go up, at least the domestic demand, I think it can be a good bet not only to hold, but even to add at these levels for a target of maybe 150, 155 rupees in the next 12 months. As far as SOEC concerned, I would say just hold on to that. And there would not be a recommended to add at these levels. It's a hold depending on the kind of quarter numbers that come out, because last quarter numbers were better than previous 2-3 quarters. Numbers have started improving. If the results have again show improvement, then we can take a further adding call. And the third one you said would be Hind Copper. That's a very good stock, having large exposures of reserves of copper. And the kind of demand which we are witnessing in the copper industry is going to do positive for Hind Copper. One can add at levels of around 180, 175, 180 odd levels. At these levels, it's a hold.
All right. So that's the take coming in on those three counters. But Snehi, given the fact the way how the markets have been panning out, a lot of them are looking at domestic-oriented sectors, and that defense also is one of them that tops the list.
Absolutely. In fact, our next query is coming in just from that sector. We have our viewer, Mr. Shiv Kumar. He's a professor. He's writing to us from Bengaluru, and his query is on BEL. He wishes to hold this stock for 2+ years, but he's asking if it now is the right time to enter, or would you suggest any other technical level? Kunal, we'll take this question with you. What's your view on BEL, and is now a good time to make a fresh entry into the stock?
See, it's a good price where you can look to start entering into the stock at current levels, even though the major support for the stock is around the 240 to 50 range for BEL. But my only concern is that I don't see the stock going into such kind of a sharp correction, at least looking at the recent charts, and especially with the yesterday's price recovery the stock has shown an island kind of a pattern on the candlestick front for BEL. So that would probably indicate that the stock would at least stabilize at the current levels of 270, 280 thereabouts. But yeah, I think 240 to 50 is a range of major support for BEL. And in case, say over the next 1 to 3 months, if there is any kind of a negative trigger for the global markets, and in case if the stock happens to reach to those kind of levels, that's a zone where you should look to average further.
Alright, so that's the take coming in on BEL. This one is coming from Prashant. He's writing to us from Bahrain, and he wants to know about green energy stocks because he wants to know if these counters will get affected or impacted by the tariff wars that we are seeing at this point in time, Rajesh. And also he wants to know what's your take on Adani Green. He has it at the levels of 898 rupees per share. That's Adani Green that he has in his portfolio. So he wants to know whether he should keep it in his portfolio or no.
See, at this point of time, I would say continue holding to the stock. Maybe 950, 980 odd levels would be a better level to exit. As far the entire green energy pack is concerned, I think they have good potential going forward, considering the fact that the government is hell-bent on promoting green energy. And they have good capacity, both of them, NTPC Green or Adani Green. But out of these two, for a long-term portfolio, I would say you can buy at lower levels NTPC Green For Adani Green, it's a hold from our side.
They're coming in on a bunch of green energy stocks. Kunal, coming to you. And well, stock of the day yesterday was Trent on the back of weak quarter four updates. That stock was in a free fall yesterday. Today, this query has come on Trent. Our viewer, Mr. Subramanian, is writing to us from Chennai. He's asking, now is it wise to buy Trent at these current levels? He already has 10 shares at a rate of 810, which he got 10 years ago. Do you think now would be a good time to add some more to the portfolio?
Not really. In case, for example, yesterday the stock fell by more than 15% on an intraday basis. Now, in such kind of a market, if the stock is unable to give any kind of a major bounce back after that, 15% correction for Trent, that indicates that the weakness is not over for the stock, and sellers who've been maybe selling the stock or traders who've been long into the stock, they would want to use any kind of a bounce to try and exit from the stock over the short to medium term. So that's the concern which is getting originated for a stock like Trent. And I think purely on that reason, I would suggest that just wait out for some more time. My sense is that if in case the selling aggravates for the stock, say over the near to medium term, you might see the stock falling to even sub 4,500 levels or even below that.
All right, so that's the take coming in on Trent. But I want to get your also view on this, Rajesh, on Trent. Given the fact, the way how the stock has been performing, you had the fact that their portfolio crossed 1,000 stores. You saw the stock rally about 7% or so. And then you had the operational performance come in and the stock actually saw a downtake. How should one actually gauge such moves when you talk about a stock like Trent?
See, for a long-term portfolio, it's a good stock, no doubt on that. Levels, Kunal has suggested 4,500 would be a good level to enter. I concur to that. 1,000 stores they have done, they are doing very well. They are into value retail and that segment is doing very well. And not to forget, they have moved into lab diamonds also. Just one quarter giving bad numbers, I don't think it's a bad news for companies like Trent. They are long-term hold. And if it falls by any chance to 4,500, 4,300 odd levels, it would be a buy from our side. At this point of time, somebody holding can continue to hold.
Combined take coming in on Trent, fundamental as well as technical. Kunal suggests to hold on for a little bit. Same coming in from Rajesh, buy on a slightly more dip than where the stock is right now, but continues to be positive on the stock. Let's move on, and Rajesh, we'll come to you. Our viewer, Mr. Sudhir, is writing to us from Hyderabad. His query is on L&T. He's asking if now is a good time to buy L&T for a 3-month holding period. So rather short term is something that he's looking to hold L&T for, but would you recommend getting into L&T right now?
See, stocks like L&T is not for short term, I would say. There might be some bounce back because of the kind of fall which we have witnessed in the market for quite some time right now. And it may move to for 5-6%, but that now should not be a strategy for counters like L&T. It should be always be a long-term kind of strategy. It has an order book of more than 5 trillion, and that's very good, I would say. Orders are increasing quarter on quarter. They're getting new orders. They are moving into hydrogen, not only domestic, but a large part of their order book is from international markets also. And the company has got good execution capabilities. It's not that it has only order book, it has got good execution capabilities. And somebody believing on Indian economy, Indian growth story, L&T is a proxy play to that. So it's a buy from our side, but for a slightly longer time horizon, maybe 9 to 12 months would be a decent time horizon.
All right, that's a take coming in on L&T. Coming next to you, Kunal. This one is coming from Venkatesh from Hyderabad. He has Mazagon Dock, about 15 shares at a price of 25.75 rupees per share. He wants to know whether he should add some more and at what price.
So, yeah, I think adding is a good strategy for Mazagon Dock. It's been relatively very strong, a classic outperformer, at least over the last 3-6 months, when the stock formed a low sub 2000 towards the point when the stock rallied up towards almost 27,800 very recently, which means now, the stock is establishing this 800 point range, 2000 as a support and 27,800 as a resistance. It's come back to the midpoint or slightly below the midpoint of this 800 point range for Mazagon Dock. So I would suggest that maybe just wait for another 100 odd point dip in case if the stock provides that kind of an opportunity. Say closer to 2200, 2250 mark could be a very good risk reward for even if you're looking at this as a medium to long term investment for Mazagon Dock.
Okay, So that's the take coming in on Mazagon Dock. Let's move on. And Rajesh, coming to you. Next query is coming in from our viewer, Mr. Sunny, who's writing to us from Mumbai. He's asking, can he sell his 1,000 shares of Dabur and switch to HUL instead? He can hold for 2 years, so that's his holding period. He's asking if it would be a prudent decision to sell his stake in Dabur, 1,000 shares, and switch that holding to Hindustan Unilever. What's the call on that?
See, both the stocks are from FMCG packs, and at this point of time, there is volume concerns in both of them. I don't think there would make much of a difference selling Dabur and HUL, but as you see, the volume growth is a concern in both of them. They have not done anything from a long period of time. Especially if you want to switch from Dabur, you can switch to Marico or Imami or even ITC would be a better choice than going for HUL.
All right, so that's the take coming on some of those counters. Let me take this next one from Vivekanand. He's writing to us from Chennai. He wants to know whether he should invest in M&M, TVS Motor, Tata Motors at current levels, this for the long term. What's your take, Rajesh? Do you think it makes sense to go ahead with these auto counters right now for the longer term, given the fact that some of them are actually seeing the repercussion of what exactly is happening when you talk about the tariff and the trade wars?
See, I agree to the fact that tariffs have taken a toll on that, especially Tata Motors, which has a large part of portfolio in US markets, JLR and all. And that might be some kind of concern in the near future. But we should not forget that it has corrected more than 50%, if I am right, from their top. So at this point of time, risk reward is in the favor. But I would like to add two more counters to the entire list. One is Hyundai and the other one is Bajaj Auto. If the person wants to invest in auto, I think these can be a better picks out of these 3-4 counters which the gentleman has suggested. Bajaj Auto, the numbers have been pretty good. They have been launching aggressively. Balance sheet is strong. And as far as Hyundai is concerned, I think the kind of leadership it has in SUV market, that's a very plus point for that. I mean, they have launched EV, Creta EV and a new version of Creta recently, and that is going to add to the numbers very greatly in the near future. I think these are some of the bets one should have a look on.
Okay, so that's the take coming in on the auto pack and what Rajesh is liking from that pack. But on that note, we'll slip into a very short break. Viewers, keep writing to us on the number that's flashing on the top of your screen, and we'll once again continue addressing all your viewer queries just on the other side of this very short break. So you stay tuned and we'll be right back.
Welcome back. You're watching Buy Now Sell on ET Now, show where we get you answers for all of your stock related queries. Remember, viewers, you can write to us on the number flashing on the top of your screen, and we have our experts who will answer all of your queries. And today we have Kunal Bothra on the technicals, while on the fundamentals we have Rajesh Agarwal who will take all of your stock related queries. So let me continue taking the queries then, and this next query that I have is coming in from our viewer Ravi Verma. He's writing to us from Pune. He's saying he's a really big fan of you, Kunal, and appreciate how you guide the investors in midst of this turbulence. He wants to know about CDSL. He has about 10,000 shares purchased at the levels of 1,200 rupees per share, and he wants to hold it for a year. So he wants to know from you, is it a safe bet?
Thank you so much for that, Ravi. On CDSL, I would believe that it's a good stock to hold on to from a medium to long term play. My only concern with the charts for CDSL is that it just looks like that the stock has not formed a near to like a major bottom for itself. There is no sign of a major capitulation. The volumes have not been all over the place for the stock. It's been a lot more consistent, and that generally is an indication that we expect the stock to consolidate and maybe drift lower going forward. So I would probably believe that it's a good stock to hold on to, but I think if you're looking at a buy, you can buy it in staggered quantity. Maybe 1/3 of your expected quantity is what you can start at current levels. But as I said, that once the signs and the signal starts to emerge that the stock is nearing a capitulation kind of a bottom, that's a sign where I would believe that you should look to allocate the remainder 2/3. So as of now, staggered approach is what you need to allocate towards CDSL.
Okay, so that's the take on CDSL, and that's the approach that you should be having when it comes to CDSL. But Rajesh, coming to you, we have a follow-up question on this query. Our other viewer, Mr. SK Karan, is writing to us from Bangalore, and this query is specifically for you. He's saying that if you had to pick between BSE and CDSL, which one do you believe is priced fairly right now to purchase more in the long term? So between BSE and CDSL, which one would be your pick?
Sneh, this is a very tough call because both of them are very good stock to hold for a long-term portfolio, fundamentally very strong related to market. But if I have to choose one, I will go with BSE. This stock which we have been recommending since the levels of 500 odd rupees went up to 6,000 and now trading at around 5,000. Still a buy from a side. Market cap only 78, 80,000 odd crores rupees, out of which it's a good corporate governance, debt-free balance sheet, huge cash in balance sheet. They have their CNX, they have gift nifty with them, Star Mutual Fund platform, and all the top are on 15% holding in CDSL. They have announced bonus too. The record date is yet to come, I think. And this can be a good stock for long-term horizon. In fact, both of them are good. But out of these two, I would go with BSE.
All right, so that's the tough call that Rajesh had to take between BSE and CDSL then. Let me take this next query. This one is coming in from Aswati, writing to us from Palakkad, from Kerala, wants to know about ICICI Bank, Kunal. Can she look to buy this one at current levels?
Again, depends on what's your time frame, what's your entire portfolio structuring. There is a slight concern for ICICI Bank in the last 2-3 days of the stock price. Now, I understand that ICICI Bank is of course a top quality name, has to be a part of your long-term portfolio. But just on the screen reading the preliminary charts for the stock in the last couple of days, there is some sort of a mismatch in terms of the price action with respect to the banking index, as well as the overall texture of how the markets generally move, because ICICI Bank is a very strong and a high correlated stock with respect to the Nifty as well as for the Bank Nifty. And generally when the market goes into the next big event, which is the RBI policy, the expectation is that private sector banking names, and especially the ones like ICICI Bank, which have been very strong, they would at least try and be a lot more formidable. But the screen reading is a bit more different for ICICI Bank. That's one of the reasons why I would believe that maybe there could be a chance that the stock may drift a little bit lower from current levels of 2090. Again, depends on your time frame. If you're a long-term investor, then maybe a few percentage points here or there would not matter much. But then if you're a short-term investor, then I think buying on dips is a better strategy.
Okay, so that's the take on ICICI Bank. Let's move on. And Rajesh, next query coming from for you from our viewer, Mr. Devendra Gaikwad, who's writing to us from Vadodara, Gujarat. He's asking that he's bought 100 shares of Sona BLW Precision at 501 thereabouts. That's his average price. Now he's asking if auto ancillary stocks will slide further due to the US tariff, and on the back of that, what should he do when it comes to his holding in Sona BLW? Should he continue to hold or book his loss and exit?
Yeah, at this point of time, it's a hold from our side. You said it right. There would be concerns on auto impact due to tariffs and all. And Sona BLW has got a large part of its order book from US markets only. Although it has got a very strong order book, most of it is from EV. But at this point of time, a large part comes from US, and no doubt that would be under pressure. But I think the negatives have already been discounted in the last 2-3 days when it has seen a great fall. Uh, Risk reward ratio is in favor. The worst case scenario, I think it can go down to around 370, 380 odd levels. But at this point of time, it's a hold. Try to exit and bounce back for around 440, 450 odd.
All right, so that's the take coming in on Sona BLW. Let's talk about Siemens. Kunal, is this a price that one would go ahead and buy this stock or wait for further decline? And this query is coming from Sangeeta, who's writing to us from Mumbai, and it's Sangeeta's birthday as well. A very happy birthday to you as well, Sangeeta.
So happy birthday, of course, to Sangeeta as well as to Anand. I missed wishing Anand, but I think on Siemens, I think after this kind of a sharp correction, what is interesting about the stock is that rarely do you see a stock like Siemens going into such a kind of a sharp sell-off. And I'm not talking of the recent sell-off. Of course, it's price adjusted with respect to the corporate action for Siemens. But then from 7,500, 8,000 levels for the stock, it fell to almost 5,000 or sub 5,000 mark very recently. And then the stock is now getting adjusted. I believe that these are rare opportunities, at least looking at the long-term charts for Siemens. When the stock has corrected by 30 to 40% on a longer term basis, they've actually become good opportunities for long-term investors. So my assumption is that you're a long-term investor, you're looking to build portfolio. Siemens is a good quality stock, and you can make this as a part of your core portfolio as well. And buying the stock at current levels could be a good starting point.
Okay, so for Positive view coming in on Siemens, and Sangeeta wishing you a very happy birthday as well. Let's move on. And Rajesh, next query coming in from our viewer, Mr. Jayesh, who's writing to us from Ahmedabad. He has purchased 150 shares of Zee Entertainment at a price of 155. He's asking if he should continue to hold or sell the stock right now.
See, it's a very difficult call because the kind of corporate governance issue and all those news flows coming into the stock has taken it all. And at this price, I think all the negatives have been discounted. And don't forget, it has one of the best BEC channels doing very well. And once these issues of the management and all is resolved, I think this stock can give very sharp move. So if you have a risk appetite of holding this stock for a long period, maybe 12 to 18 months, I think one can continue to hold.
All right, this one is coming from Somashekar, writing to us from Bangalore, wants to have a short-term view on BPCL, Kunal, 350, okay, 200 shares bought at 350 rupees per share, wants to know whether to hold or average the stock. What's your take coming in on BPCL? No doubt, there was a point in time where these OMCs were having a good run as well. When that entire PSU pack was running, we saw OMCs also actually see a good run. Right now, BPCL heavily dependent on what happens in the crude oil market. Right now, it is in their favor. But what's your take?
So it's a good stock to have, of course, as part of your portfolio. But then I think maybe if you're looking to average further, since your price is at 350 levels, the stock is almost 20% lower from your purchase price. I would believe that rather than buying at current levels and not even on dips, I think wait out for that breakout of the 300 mark for BPCL, because that would really turn around the stock over the medium to short to medium term. And I think that's where you would probably get a lot more better opportunity to try and exit the stock earlier, or at least book profits in case and whenever the stock breaks past about those 300 levels and say comes back to your average cost price, which could be adjusted towards say 325 330 mark for BPCL. So I would suggest that just wait out for a breakout about 300 mark. That's a very good zone of confirmation for you to average or buy BPCL.
So that's the take coming in on BPCL. Kunal, in fact, the next query is also coming for you. It's from our viewer Vivek, who's writing to us, and he's asking about the stock KEI Industries. He's purchased at 3,000 rupees. Now, we don't know how much he holds right now, but he's asking what price is a good price to average his holding, or should he continue to hold for a swing trade advice? So what's the call here?
So, I understand again that KEI has gone through a sharp correction, of course, with the slew of news flow around the stock price and the entire sector. But, interestingly, the stock is not showing any kind of a major oversold, nature on the weekly, monthly charts for KEI, even after a correction from 5,000 levels to almost a 50% correction towards 2600, where the stock is trading right now. Historically, for example, on the weekly charts, the stock is near the 200 plus moving average. But then historically, we've seen that in 2020, 2016 or prior to that, whenever the stock has gone through a correction, the corrections have extended below these weekly moving averages also. So I believe that just wait out for maybe another 1 to 3 months. Maybe over the zone of the next 1 to 3 months, you might probably expect the stock to head towards 2200, 2250 mark. That could probably be a better level for you to buy.
Right, talking about KEI then, we also have Sagar who's written to us. He wants a combo view on Polycab as well as KEI. Kunal, since you just spoke about it, let me ask you this query, because in his case, he's holding short positions for Polycab from 7,000 levels and KEI from 3,900 levels. So do you think it is prudent to go ahead and book profits here? Or do you see a further leg of correction? And if yes, then what sort of levels?
So, of course, I think since you've been shorting at higher levels, my assumption is that you've been looking at this as a carryover trade. I think you can continue to carry over the trades for both Polycab as well as KEI. As I mentioned, that there's a very strong chance that you might probably expect that these stocks may drift a bit more lower before they come back into the oversold nature on the indicators. The only concern with these stocks right now is that the indicators are not oversold on the weekly and the monthly charts, and that's why I think calling a near-term bottom is a bit more tricky, and that's why I would expect that maybe the stock could drift a bit more lower from current levels.
All right, talking about wires and cables, then let me come to you, Rajesh, because Sagar has a question for you as well. He's saying that with the entrance of deep-pocketed players in the segment, he was asking, do you see margins getting impacted in the medium to long term? By how much? And any growth projections that you have, especially the quarter numbers or the quarter ahead?
See, margins will be under pressure because selling and distribution costs are going to go up. A lot of large, bigger names have been tried to enter. builders are coming into this. But the fact remains the market is very huge. And with the kind of expansion we are witnessing in the real estate market as such, I think these kind of industries are doing very well and they will continue to do well in the near future because of the fact that not only the players are increasing, the market is also increasing. The demand is there. Out of some of the names which we have been told right now, KEI, Polycab, I think Polycab is a better play on all fronts, I would say. Maybe margins or the product profile it has. It has moved into FMEG, that's fast moving electronic goods. And the best part is has corrected quite a lot from its recent highs. Uh, Trading a decent valuation. As far as recent near-term margins are concerned, I think the this quarter margins won't be under maximum pressure. The pressure would be in the next few quarters where we feel that there would be some kind of pressure on the metal side as such. So let's see how things pan out. But if metals are under pressure, maybe copper prices go down due to China and all, the margins would be rather be positive for these companies. So it's a long call to take, but Polycarb is a better play out of these.
So Rajesh is preferring Polycab over KEI, so that's the view and the approach to play the entire wires and cable space, given everything that's been happening with commodity and especially copper prices right now. But Rajesh, we'll come back to you. This query is especially for you. Our viewer, Mr. KB Rao, is writing to us from Hyderabad, and he's asking about two stocks. If now would be a good time to buy NCC and IREDA. He wishes to hold for more than 1 year at least. So, what's your take on both of these stocks?
I think at this point of time, avoid both of them. Both have run up quite a lot. Valuations are stretched, I would say. If you compare IREDA with PFC or REC, it's trading at premium. Despite the fact that, although it's a fact that IREDA is into renewable financing and all, but still the premium is very high. At this point of time, both are avoid from my side.
Call coming in on both of those names. Let's move on. And Kunal, next query coming to you from our viewer, Mr. Kaushik Mitra, who's writing to us from Mumbai. And he's asking, if you were given a choice for a better prospect between BHEL and Hudco, which one would you pick for the next 6 months? Our viewer holds both, but he wants to get a better understanding on both of these stocks and which one you would prefer between BHEL and Hudco.
It's a very, very tough one. I'm not sure whether I can probably play, in terms of just picking out one stock. I would actually go with both, because both the charts are very attractive when I look at this on a longer term prospect, both BHEL as well as Hudco. And my sense is that both of these stocks are now getting back into that or getting back into the phase of ending a corrective wave. Over the last 6-7 months where these stocks have corrected. So Hudco, for example, has corrected from 350 levels thereabouts to I think 200 or sub 200 mark, which was the recent low for the stock. BHL also I think has gone through a similar kind of a correction. I think 185 or 190, if I'm not wrong, was the recent low for BHEL, and the stock seems to be bouncing back from those levels time and again, which means that what we are looking out for is more of a base formation for both of these stocks. The charts, of course, from different sectors, but the charts are more or less similar for both of these names. That's why it becomes very difficult to pick and choose just one out of those two names. But if possible, then I would suggest to hold on to both of these stocks if you can.
Okay, so try and hold on to both BHEL and Hudco. Kunal is super bullish on both of these names. Rajesh, we'll come to you. We have our viewer, Mr. Akhil, who's writing to us from Delhi. He says he's a big follower of you and he wants your advice on this. He's a long-term investor as well. He's asking for your take on Asian Paints as well as Tata Technologies at the current market price for the long term, say 2 to 3 years or more. He's asking, do you see if they have a potential to give 50% return in the set period? Which one would you suggest to buy and invest in between Asian Paints and Tata Tech? And also, if you see a 50% return in the next 1 year, how is that? How likely do you think that is?
First of all, thank you for following me. And as far as both these companies are concerned, both have strong fundamentals, no doubt on that. Asian Paint has got strong brand, has been ruling the paint market since a very long period of time. But the fact remains the numbers have been pretty bad in the last 2-3 quarters. Margins have fallen, bottom line has fallen. And with the kind of competition coming in now, Birla has entered the fray. Astral is coming into paint. GSW is coming into paint. The competition going to be heated. It's better to We'll stick to Tata Tech at this point of time. Out of these two, if I would say, Tata Tech is doing very well. There's strong portfolio of not only auto software but other things too. Previously, they were more dependent on Tata Group for their products. Now they have diversified to other clients. They have diversified their product profile, and they're moving into new divisions too. And the fact remains that from last November, if I'm not wrong, the listing was around 1,400 odd rupees, and it's moved to 600 something. That's more than 50% correction, despite no change in fundamentals. So it's a very good buy at these levels.
So that's a take coming in from Rajesh. But viewers, time now to slip into a very short break. Hi there, welcome back to Buy Now, Sell Now. Time now to keep us going with all your viewer queries, and viewers keep writing to us on the number that's flashing on the top of your screen as we speak. But let's keep it going with our experts who are joining us once again on the show. We have Kunal and Rajesh back with us. And Rajesh, let's come to you for this query. Mr. Subramaniam is writing to us from Bengaluru. And the stock in question is Titan. He says that Titan's quarter 4 update is very encouraging, but the previous quarter results are not quite strong. So he is asking if this is a sustainable trend that Titan is seeing, because last night, Titan came out with a good set of quarter 4 numbers. Jewelry, eye care, watches, CaratLane, Tanishq, all of them are doing pretty well. He's asking, what is your view on Titan and where do you think the stock can go from here? Is this quarter 4 performance that we've seen sustainable going ahead as well?
In the near future, yes, the performance is going to be sustainable because of the fact that we are entering marriage season in the next quarter, and that would be a booster for the next quarter numbers too. Not to forget, the company belongs to Tata Group, doing very well. They have good chain of stores into eyewear, jewelry, and watches. Almost all the divisions are doing well. Even the Canara, which had a slow start sometimes back, is doing slightly better, I would say. And it has correction quite a lot from its recent highs. That gives a scope for upside. So maybe a target of 3,700, 3,800 in the next 9 to 12 months is quite possible. Every dip should be taken as an opportunity to accumulate. I think it's a buy, but I would suggest buy in a staggered way, considering the kind of market situation we are into.
All right, moving on then from Titan, coming to you, Kunal. This is Mayank Saraf, who's writing from Delhi. He says that he holds 5,000 shares at the buying price of 700, KEI International. He wants to know your view. Recently it has fallen from 1,300 to 650. What is your view on this for the next 2 years?
So, it looks like that the stock is now starting a bottom formation process. The volumes in the last leg for KEI was exceptionally high. And in that last leg of the move where the volumes were pretty much on the higher side, the stock rallied from 650, 60 thereabouts towards 840, 850 plus mark, which means now we are looking at the stock establishing a base just closer to this range. There are times when the stock would probably, fall at extremes much lower or much higher than the ranges. But broadly, when the stock gets into a time-wise consolidation, this range is where, we expect that the stock would probably hold on to. So I think we are now at the lower end of this price curve for KEI. Could be a good time where you can look to even average further, assuming that your cost prices are a lot more lower. But I think if you're holding on to it from a long-term play, I think you should continue to hold on to the stock.
Okay, so continue to hold KEI. Positive call and bullish call coming in from Kunal on KEI. Let's move on. Rajesh, coming to you, stock in question is Canara Bank. We don't have the name of the viewer, but they have 1,000 Canara Bank shares. They're asking if they should sell or accumulate further. Our viewer has purchased this stock for 96 rupees. The stock is, I believe, around 87, 88 thereabouts right now. So slight bit of a loss is what our viewer is sitting on. So what's your take on Canara Bank? Our viewer holds 1,000 shares.
See, the entire PSU banking space is looking very good. Considering the fact the balance sheet has been cleaned up, NPAs are on the lower side, and IMs would start improving once rate cuts happen, and not to forget the bond portfolio, which is going to give good returns due to interest rate fall. Canara Bank is one of them. I think one can buy at these levels. Even the other bank which is in this page looks good as Bank of Baroda or a Bank of Maharashtra. So all these three banks in the mid-cap space are looking very good.
Moving on then from Canara Bank to the pharma pack. This one's this query is coming from a senior citizen, Mr. Singh, who's writing in from Pune. He wants to know the technical levels to enter Piramal Pharma. Interesting choice because Piramal Pharma is one of those pharma names that is very domestically facing, also has a very strong CDMO business with them. So Kunal, tell us what are the levels to enter Piramal?
So I think sub the 200 mark could be a very good zone for you to start accumulating or adding Piramal Pharma. I think it's a quality stock so far. Looking at the last two and a half odd years of history for the stock, from being at a point where I think the stock was 75 or 80 rupees towards a point when the stock touched 300 mark. It's been a stock which has moved exceptionally strong. It's a corrective wave for Piramal Pharma. The stock corrected towards I think 180 mark, and from there rallied towards 240 levels. So which means that this 60-70 point range is broadly the range for Piramal Pharma. Say 200 thereabouts could be a good zone for you to accumulate or add further. If in case the stock, say over the next 1 month or so, doesn't correct further on the downside, then I would believe that you may probably have to up your proposed acquisition price also.
Okay, so that's a take coming in on Piramal Pharma. Rajesh, coming to you, our viewer, Mr. Ramesh is writing to us from Bangalore. The stock in question is BEML. He is holding 60 shares, which he bought at around 3,600 rupees. He is asking if he should continue to hold or if he should sell his entire stake in BEML. What's the take?
It's a buy from a side. All three divisions, mining, equipment, mining, metro and defense, all three are doing very well. Numbers have been pretty good. Order book is good. The management has clearly said to increase their revenue by around 20-25% on a CAGR basis. With the kind of traction which we are witnessing not only in metro coaches but also in defense, I think this company is a very good long-term play. So at these levels, if your funds allow, you can even add to this.
All right, BEML, a good play there, a bullish call coming on BEML. But moving on, Kunal, I'll come to you. This is KB Singh, who's writing from Chandigarh, wants to know about Venkys. He's purchased 600 units of Venkys yesterday at 1,560 rupees. Now he wants to know your view, a reasonable target for the next 6 months. So his holding period is for the next 6 months. What should be his target?
So I think over the next 6 months, I would actually expect the stock to continue to be into a range. 2,200, 2,400 is the upper end of the range for Venkys, and on the downside, 1,600, 1,500 is a support for the stock. It's at a support point on the longer term chart. So maybe if the markets recover, the stock comes back into the higher end of the range, you could look at 2,200 to 2,400.
Which is for you. It's from our viewer Deepak, who's writing to us from San Diego, and his query is about Amara Raja and Exide. He's asking that between these two, Amara Raja and Exide, which would be your preferred pick? Though Amara Raja has better valuations in ROE and lower PE than Exide, which one would be good for a 2 to 3 years investment? Kunal, he's also asked you for a technical view on both of these, since he says that he's asking if Exide is prone to slower movements as it is in the F&O segment, unlike Amara. He's an investor and not a trader, which means he's looking to hold both of these for the longer term. So first, Rajesh, we'll come to you on which one you prefer between Amara and Exide, and then Kunal will come to you for the tech checks on both of them. Rajesh, take it away.
See, I would say it's a very, very tough call. Both our companies are doing very well. Both have good OEM contracts with major auto players. Numbers have been pretty good. Exide is moving into EV space too. So I would say, why not buy 50-50 both? For example, if you're planning to invest 1 lakh, why not 50,000 into Amara Raja and 50,000 in Exide? Both are a good long-term play for maybe 12 to 18 months minimum time horizon. And a 20% upside from these levels is quite possible.
Okay, so Rajesh, that's your take between Amara and Exide. Kunal, what are you spotting on the charts for both of these stocks?
So yeah, I'll agree. It's a bit difficult to try and pick and choose, one of them. But when I look at the charts for both of these stocks, Exide, is the one which seems to be more sustainable in terms of trends. So whenever the trend starts off, it's generally Exide which has actually looked a little bit more strong. There's been a slight bit of leadership edge in terms of the price performance whenever the battery stocks have moved up higher. And then Amara Raja, mobility, I think, that stock, it tends to pick up a little bit more late, but then it tries to cover up with the, zone of price underperformance. So it's a bit, mismatched in terms of the, stock picking, because initially it looks like that Exide Industries is the one which is more strong and stable. But because of the high beta nature for Amara Raja, I would believe that the stock would eventually play a catch up. So as of now, it depends on your risk appetite. If you're since you're a long-term investor and you're looking at stable kind of trends, I would actually look at Exide Industries as of now.
All right, that was the last talk for the show. Kunal and Rajesh, thank you so much for taking the time out and joining us. But we will have to wrap this edition of Buy Now Sell Now. Sneh and I will take your leave. Thank you so much for tuning in. Don't go anywhere because Markets at Noon takes the action forward.
If you like this video, then like, share and subscribe to ET Now.